The next screen we cover is summary and payments. This screen has some of the more non-linked information about a client. So we'll start with asset details. Asset details is meant to be there to capture all the assets that a client has, which you might be able to liquidate to improve your circumstances. These asset details will be displayed on the proposal documents so that it is disclosed to the credit provider. So if I click add asset, it will bring up a screen for me where I can go and type in the details of this asset. The first field, description, is where I describe this asset, and the new industry convention says that if it is a house, we type in the address. If it's a car, we type in the year and model of that car, or then also any other description for the asset. So for instance, I can say that this is a 1968 Ford pickup, and then that category would be that it is a movable asset. I can then select there also, is it a cash investment, fixed property, matured insurance, share investment, or whatever the type is. The next field I have is encumbered. Encumbered means that there is debt over this asset to which is it tied. So if this is a car that's still financed or a house that has a bond on it, that's where I would say it's encumbered. If there's no finance over this, then I can say it's unencumbered and I don't tick the tick box. Status, what is the status? Is it on auction? Is notice giving? Is it repossessed? Is it up for sale? Has it been sold? And these statuses and categories are as specified in the task team report and in the DCRS rule system, so that they are industry compliant. The next field is creditor. Now here you can say, if it is an encumbered asset, who is the credit provider who financed that. You will see that there is a ellipsis search prompt here, so we can go search it from our standard credit provider database, or you can type in the name. So this one we said is unencumbered, so there won't be a creditor. And then amount, what is the value of this asset? What is the actual value that will be realized? So this is not net after debt has been paid, just what is the sale value of this car. So I say mine 50,000 Rand, being a classic relic. So I can click add. Now I see that it has added my asset here. If I want to remove it, you'll see there's a little dustbin next to the asset there. If I click on that, it will simply delete it, and so I can add or delete assets as is required. The next field I have here is a field called once-off payment details. Now this field will only work with when the negotiated rule is applied, and not when the DCRS rules is applied later when we do a proposal. But what this allows us to do is to say, if there is affordability left after the debt counseling fees have been paid in month 1 or month 2, the legal fees have been paid, and there is something left over, either the system will automatically allocate that to credit providers, or we can go here and manually override where that goes. So I can go say that this is the first or the second month, and I can say that it might be for a doctor's account, and I say this is 500 Rand. This is very handy to settle those accounts that either there is a judgment or something out already, or doctors or small store accounts, or something that is a small amount and easy to settle in this month. And then it makes the process easier, because otherwise this account would have been paid over 24 months when restructured. So this is just a handy tool, but do remember that it only applies to the negotiated rule. Again, in the same way I can remove it. Then here at the bottom in the details section contains the details about fees that gets collected from the client. Now the first field there, contingency percentage, is the percentage that we allocate towards a savings contingency for the client. This amount gets taken off before we distribute to the credit providers and the debt counseling fees, and is meant to be going to a reserve saving for a client so that he can save for the rainy day. So I can take this now from 20 and I can make it 10%. Clicking calculate here redoes this affordability calculation, also redoes all the fee calculations, and then I'll see that the contingency amount here reduced from 1,000 to 500 Rand. I can make it 0% if I want to. Application fee is the upfront application fee that the client must pay me for 50 Rand or 57 Rand including that. Then we have aftercare fee. Now we'll see there's two, DC aftercare fee and secondary aftercare fee. The reason for this being is that the fee structure says for the first 2 years it's 5%, after the first 2 years it's 3%. So the aftercare fee one is the first 2 years, the secondary one is for after the first 2 years. Now this does get calculated by the system, but I can manually override it and go type in a different amount if I would want to. When the system won't calculate it for me anymore, care must be taken here though, since if the amount is not inside of the guidelines, the PDA will still reject it for upload with incorrect fees. Then we have single and professional and joint professional fees. So this is the fees that the debt counsel gets in month 1. Again, it will be calculated by the system, but you can override it by ticking the tick box. Next one here is the legal fee, the amount that gets paid for the attorneys, and we can change this and enter the amount. The tick boxes at the bottom, first one is application fee paid. This indicates whether the 50 Rand application fee has been paid or not. If it's not ticked, we'll include this in his debit order in the first month. So the client's debit order will be 50 Rand more than his affordability to include that. Or I can tick it and it will exclude it from that calculation. The tick box is submit professional fee to hyphen and submit professional legal fee to hyphen indicates whether we collect the professional and legal fee through the PDA. Some debt counselors get the client to pay this in cash manually. Then you would untick the fees. We'll still include it in the calculation, but it will not get submitted to the PDA. The last section on this screen is the summary. Now this summary indicates the client's financial circumstances. It starts with income. This income is not the net income, not yet quite the gross income. It's the net income including any financial services deductions that are on the client's payslip. From that then we deduct the household expenditure and financial services to get to a gross affordability amount. From that we subtract aftercare, contingency, PDA fees to get what's available for the debt payments. Then we get the current debt payments that the client must pay, and here we then can indicate is the consumer over indebted or not. This is a great tool to give a consumer an idea of what his financial circumstances are. And that is the summary and payment screen. Very simple, but does have an impact when we will later do proposal.